Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player.
Good weekend all. Ira Epstein with your weekend edition of your financial market wrap-up. And this is for Friday, the 16th of November, 2018. We're about 3:30 p.m. Central Standard Time. And as you can see, you're going to get a settlement that's on the stronger part of the markets. This is about where the markets are going to finish. The NASDAQ will be down, but the other markets will be up by the end of the day. Gold is really going to be closer to $12.23. The dollar was down. And as you can see, a host of foreign currencies were up against the dollar. That's a combination of the Fed Vice Chair and our chair in speeches this week, giving the impression from the vice chair, Clarita, that we are getting very close to neutral, and from Mr. Powell looking at the market and, saying he's looking at other things. The market likes to interpret. I can't tell you that the Fed is through or not through. I can tell you Cramer went crazy on this whole issue because he thinks the market, the Fed's got it wrong and it shouldn't be doing what it is. So does the president. Okay, let's go to our charts. Now remember, on our weekly edition, we look first at a monthly chart, then we're going to go to weekly charts just to get a better feel as to what the bigger picture looks like. On a monthly basis, you haven't even hit an 18-month moving average of closes since 2016. So as severe as this pullback was, and that's a heck of a break in the market, any way you want to cut it, this market got down and it got to a low 26.03 from this high of 29.36. That's a heck of a lot of points in a month, and we're getting a little bit of a bounce at this point in time. But remember, we're only halfway through the month. When we take a look at a weekly area chart of closes, this is where the close was of this market on a weekly basis. You can see how the market's been acting. Yes, we have a correction, but if you can take out last week's high on a closing basis, that was 28.18, I will be impressed with that market. So I want to see what that does. Weekly bar chart. Let's understand what this is. I'm coming from this low down here to this high, and then looking at the break back in the market. This is a correction, a midpoint, and the first one. So from that high, you break down, you're getting in from that low to your 1/3, your 50%, and your 2/3. Numbers are a little different, but that gives you an idea. If this market can get back over the highs right here that we had last week of 28.18, I could make an argument that this market could be setting itself up to come back up to this level. That would be an argument. When I put the swing line on, the reason that number is so important is if you take out 28.18 and you don't get back under these lows here, what you'll have is the possibility of higher lows, higher highs. I look for that. You'll hear that all the time from me. If you don't like hearing it, sorry. But that's what a trend is. And that trend would be in an uptrend. Lower highs, lower lows has been a downtrend, and you can see how that set itself up. Where's the resistance? 28.28, and that's going to drop. So if you look at last week, or this week, we're at 28.20 week. Last week was 28.31. The week before, 28.30.5. We're not going to drop very much because of the sideways action is what I'm getting. You can always go back 3-4 and you get an idea. I don't have the exact math there. But if you clear 28.28, just expect that in that 28.30 zone is where the next resistance level is for the market. And above that, it's at new highs. If you use Bollinger Bands. What are Bollinger Bands? Bollinger Bands are an algorithm designed to keep the market trading within them 95% of the time. Now what this market has done is, before you had been coming up in price, and suddenly these bands are flattening out there. Hasn't quite done it here. I'm waiting to see if they do that. Flattening bands are often a sign a market's going to start spinning within them. Don't have that set up quite yet. This gray line, 26.76, was the closing price in that year. Got it? So that's what I look at always, want to see what is going on. And that was 2017 on this particular chart. And the market's been trying to hold that number. That's what I look at. In the NASDAQ, in the pink number, I've decided to put them there. I think it reads a little better. Lower highs, lower lows. Also here, if you take out last week's high, which in this case was 72.31, it puts into place that the 18-week average in red would be the next resistance zone. That would also break the pattern of lower highs, lower lows. Until that happens, who's got control? The bears. If I come back to the S&P, until you take out 28.18, who has control? The bears in the market. You're under the 18-week averages. The bias is down. The trend is down as defined by lower highs, lower lows. The Dow does not have that. If you look at this pink and you look at the settlement price for 2017, that's what I've got on this chart. So this market also came down into a key area, fighting for it. Obviously, you lost back a big chunk of your gains, but the market isn't as bad as it could have been. That's what I want to say. What's the difference here? You've got a lower low and a higher high. You're not in a downtrend. What else? If we look at the settlement at 25, roughly 450, 25,698, you're not that far away from getting up and over that 18-day average of closes if you're going to get upside bias on the market. Now, you'd have to take out on this chart to get the higher lows. You got the higher highs, this week's high. So 26,096 is going to be a big important number to me on that chart. The Russell fell back. This was in pink again, the settlement price. Lower highs, lower lows. It is so far not displaying any characteristic that it's real close, as you can see, to the 18-week moving average of closes, but the setup is there. If you get over 1589.20, it could set up that higher lows, higher highs. All these markets have one thing in common. They're still under their 18-week moving average of closes. They all have downside bias. Got that? In the VIX, the market's got now a pattern of lower highs, lower lows, but it's over the 18-week moving average of closes. That puts the market neutral. It also is fighting a battle. It seems that on those panic days, it gets up and over that Bollinger Band, and within hours, 16, 20 hours of trading after that, it just comes shooting back under it. So that's important. The Bollinger Bands are reestablishing. Do you remember me telling you just a moment ago that sideways action is what I like? That's what trends come from. And in this market, it just exploded to the upside. But we've had a pattern now of lower highs on these big important highs. And I look at that also. There's nothing on this chart that is bearish yet, but there's also nothing that's super bullish. In the 10-year note, the resistance is right here at that 18-week moving average of closes. You have a pattern of higher lows, higher highs. The momentum of the market, as you can see on the bottom, is turning up, and it's running to this brick wall. Now, if you see a break in the stock market this week, or if the president says something that spooks the market, or the Fed says something to spook the market, or Brexit spooks the market, you can get it further up. But you are in a resistance area right now in that market. TLT is void of trend. You have a lower low and a higher high. This market has downside momentum still. It's got to get this number to close over 20 in order to say that momentum's starting to turn up. So it has not followed exactly what's going on with the falling interest rates in the bonds. In the dollar index on the weekly chart, you keep running into the resistance point of these Bollinger Bands, and you don't seem to move from them. Support's been pretty good at the combination of the 18-day average and the 100. And you've got a real battle coming up. When you get into the month of December and January's projections, people will give you what they've got. I'm already hearing some people saying this is a top being made in the dollar. Others saying, no, the U.S. rates are going higher. That's going to keep things going. I don't know. But what I can tell you is until you take out this 95.48.5, the bulls still control the market. In the eurocurrency, if you go to the daily chart, it looks completely different than this. The weekly chart is still very much in the bear camp. The resistance is the combination of the green, the 100 week moving average, and the red. So the 115.78 to 115.82 levels the resistance. Momentum has been lost to the downside. It's not pointing up, it just was lost to the downside for the moment. And the pattern is still bearish, and you have downside bias. The longer picture is still in the bear camp here. In the British pound, the chart action is bearish. Lower highs, lower lows. Momentum is pointing down. The bias is down as the market is under the 18-week average of closes. You hit the Bollinger Band 3 weeks ago, went back up to the 18 and 100, made a nosedive back in this week, missed that lower Bollinger Band by 6 ticks. I mean, it's for all purposes there, and I'll still call the resistance at the 130.02 level. Obviously, if you can play Brexit, God bless you, but it's very difficult. Every day is a major report. The Canadian dollar is going to do something big soon. This sideways action is that spinning that I talk about. And you've had a pattern of lower highs, lower lows. It has hit its downside target, the Bollinger Band. It's in the midst of a bounce. The momentum is still down. The bias is down. I think the resistance is the 76.60 level. In the Japanese yen, you have an outside week up. No surprise there, given the chaos in stock markets, the chaos that we saw in currency markets. I can go on and on. Energies, I mean, it's been pretty crazy. But lower highs. Now, if we take a look at this week's low, it was 87.67.5, which is lower than that low. So even the rally here, I'm going to be looking at the resistance point in the bigger picture, not support, resistance point up in the 89.53 to 90.12 area. In Bitcoin, the market on the weekly chart is finishing underneath the Bollinger Band. Momentum is pointing down. Now, this has been sideways action that's trying to break out to the downside. Will the market be able to now add to this break in the market? I was surprised to see it get this low this week, but here it is, and there's nothing friendly on this chart until you get back up towards that and knock out this last high of 65.45. If this market starts letting go here, it can be very nasty. This is all power, and it can take that market down. Bears have control. In Brent versus WTI crude, you've gone from 261 in July to 1066, and here you're finishing out around 1017. Still favors Brent over WTI. However, I think you'd agree, this has been a monster break. You just came from 86.72 and you're finishing off around 66.95. The market did last week pay attention to the lower Bollinger Band that is this week. If it gets another leg of selling, the 100-week average comes into play. There's nothing here that's bullish. You haven't even turned the momentum of this chart just yet. In WTI crude, you're under all the key constraints of this market. This went from 76.90 to 54.75. I don't know where it's going to end. The daily charts still have fully embedded stochastic readings. That makes sense here. Should this market soon try to fight to get up? Yes. You've got 3 weeks in a row of under the lower Bollinger Band. I count each one of those weeks as, when they're successive, as one of the percentage points of the 95 percentile rule, that 95% of the time the market will trade within the Bollinger Band. That does not mean it suddenly gets over the band and runs up. Plenty of bear news here, but you can get a surprise at any time. And if we look at Brent, it's only the first time it's under that number. Rebob gasoline, 4 times under it. And then now, if you take a look today, the Bollinger Band's 162.45, you're under it. This market's ready for a bounce, is what I would tell people. The trend, down. Momentum, down. Bounce, that's my word. Could the market find resistance way up here? Sure, that's 17 cents higher. Remember, it takes about 3 weeks, by the way, from the time you take the crude oil itself, refine it, put it into the marketplace for all these prices to be fully in place. In the nat gas, what need I tell you? The cold weather set this market off. But again, please look and learn. Sideways action. In order to get it, you always either get overbought, oversold on a daily chart. Weekly charts, I don't use overbought, oversold. I just look at the momentum. You had higher lows, higher highs. The market starts moving out on you. Market moves out. Market comes back, checks it, gets under the Bollinger Band. So you negate all those consecutive times, and then the explosion happens. So you don't have a lot of days over that Bollinger Band, is my point. So you put it all together, you try to come up with the game plan, and that's the idea that we have. Now, one of the things we try to do for you is put together guides. We have put together a brand new trading kit. I'm creating the advertising for it. It's finished, and it's the best one we've ever done. It's got more data than we've ever put in it. One of the things in it is our guide to technical indicators, but there's more coming. If you use the Arun indicator, I'm putting that into things. If you like to learn from the Chicago Mercantile Exchange, we point you to the key areas on their website so you don't have to go searching forever. And it just takes you right where you have to go. I think you'll like what you see there. They seem to put out the best information for the average trader out there, not in terms of day-to-day research, but in understanding indicators, things of that nature, and I think we do a pretty good job here. Give us a call, go to our website and sign up for this and click there. Other than that, you have a great weekend, have a safe one, and I'll see you all Monday.